Okay, let's dive into a really unusual day in the global coffee market. Our mission today, unpack October 7th, 2025. Coffee futures took a serious nosedive. We need to figure out what exactly drove that sharp drop.
Yeah, the signal is pretty clear, especially for Arabica. Prices saw, a significant reduction. A lot of it seemed driven by technical selling.
Technical selling. So the
I mean,
algorithms.
exactly. Computers hitting automatic sell triggers. It's more about chart patterns, market psychology, sometimes ignoring the actual supply on the ground.
Okay, let's look at the numbers then. How bad was it?
Well, Robusta futures in London, the November 25 contract, dropped $56, landed at $4,471 per ton.
Okay, $56 down. And Arabica.
That was the bigger shocker. Arabica in New York for December 25 fell a hefty 9.40 cents per pound.
Wow, 9.4 cents. That's substantial. What about origin prices, like in Vietnam?
We saw a bit of softening there, too. Domestic prices in places like Dak Lak were down slightly, around 115,000 Vietnamese dong per kilogram.
Okay, wait. So you're saying a nearly 10-cent crash in New York. But the global supply picture, it's actually pretty stable, right? The ICO report, didn't it show only a tiny increase in exports, like 0.2%?
Exactly, a marginal increase. And that's the key disconnect. That tells us we need to look beyond just the coffee itself.
So external factors then. What's going on outside the coffee world that's dragging prices down?
Well, a big one right now is the U.S. government shutdown.
How does that play in?
It's delaying the release of key economic data. That creates a lot of uncertainty in the markets.
Right, traders hate uncertainty.
They really do. So speculators are reacting. They're pulling capital out of commodities, not just coffee, and moving into safer assets.
Like gold.
Like gold, yeah. Gold price has been climbing. Plus, you've got the U.S. dollar index, the DXY, strengthening.
And a stronger dollar generally pressures commodity prices.
Right, especially dollar-denominated ones like coffee. So, you see, it's investors reacting to delayed numbers, not necessarily a sudden glut of beans.
Okay, so a bearish picture driven by external uncertainty, even with stable physical supply. Let's connect this to trade policy. That seems to be creating clear winners and losers here. Brazil, for example.
Brazil is definitely feeling the pinch. Their exports to the U.S. are down significantly, about 20%.
20%? Why so much?
It's specifically due to tariffs. And those trade negotiations about the tariffs, they've stalled. So that's really capped any potential gains for Brazil in the U.S. market. They're losing ground.
Brazil's pain seems to be Vietnam's gain then. How's Vietnam doing in contrast?
Oh, they're doing very well. Exports for the first 9 months of 2025 hit 1.23 million tons.
And that's up compared to last year?
Up significantly, 10.9%. They aren't just gaining market share, they're really vacuuming it up where Brazil is struggling.
Interesting. So tariffs hit Brazil, Vietnam steps in. But there's another layer here, right? The regulatory side?
Yes, and this is really high stakes. Fair Trade is now officially asking for a delay on the EU deforestation regulation, the EUDR.
Why the delay?
They're saying farmers are simply unprepared. The compliance requirements are complex, and they need more time.
Okay, so how does this EUDR factor connect back to Vietnam and Brazil?
Well, think about it. Vietnam is already poised to gain U.S. market share because of Brazil's tariff issues. Now, if the EUDR isn't postponed, and assuming Vietnam is perhaps better prepared than some competitors.
They could gain even more ground, potentially in Europe, too.
Exactly. They could benefit from both Brazil's U.S. tariff problems and potentially from competitors struggling with EUDR readiness. It's a unique position.
So wrapping this up for someone watching the market, what's the core takeaway from October 7th?
I think the main thing is this disconnect. You had a sharp, technically driven price drop.
Right, fueled by fear over delayed U.S. data and a stronger dollar.
Completely overriding the fact that the actual physical supply of coffee beans globally is, well, pretty stable.
So that panic selling might be temporary, but the underlying shifts, like trade policy and regulation, those have longer legs.
Absolutely. The short-term volatility was about fear. But the deeper battle shaping the next few years is regulatory and geopolitical.
Okay, so a final thought for our listeners to chew on.
Yeah, consider the immediate impact of this fair trade request to delay the EUDR. Ask yourself, are we moving into an era where coffee trade fortunes are decided less by weather patterns in Brazil or Vietnam, and more by committee meetings in Brussels or Washington? Is it bureaucracy or actual sustainability rules that will define who wins the coffee game in the next decade? Keep an eye on that EUDR decision.
A fascinating question. Regulatory chess versus market fundamentals. Lots to think about.